So today we are talking about how to make a profit when you're in a rental deficit with your scenario. Specifically, we want to discuss how a person with a $1,600 a month deficit on 2 rental properties can still come out ahead by just implementing a strategy. I actually said that we're going to do 3 different ways to do that, but I lied. We're actually going to do 4. So let's jump right in and I can show you the first scenario. So this is the scenario we're going to talk about today. I'll just go quickly over the basics of it so we can get a handle on kind of who this person is, this fictional person is, and how we can benefit this scenario. So first of all, you always need to know what a re-advanceable mortgage is. Re-advanceable mortgage, I always start with this, is when you pay down your principal, you don't lose that borrowing power. That borrowing power is shifted to a HELOC, a home equity line of credit. So if you pay down $1,000, $1,000 becomes available in your HELOC with an ability to borrow it. And so that's crucial to pretty much any strategy we're going to talk about and every strategy we're going to talk about today. So now with that out of the way, let's jump into his situation. So this person has a mortgage on his primary residence. It's a $1.6 million residence. He has about $1.35 million on it. He pays $5,500 a month and is for the next 26 years. Standard mortgage, so nothing special there. Let's talk about his rental properties. So rental property 1 is worth $1.1 million. He has a mortgage balance of $820,000 on it and a pretty poor rate at 5.21%. So after collecting rent of $3,700 and all the extra expenses that he has for that property, he's coming out negative a bunch, a negative about $1,500. Now, rental property 2 is a little bit better. It's a similar mortgage. He has about $800,000, $790,000 in mortgage over 30 years again. He collects $4,600 in rent per month, but he's coming out positive about $215. Now, that doesn't equal $1,600, so let's examine why it's negative $1,600. Whenever we look at strategies, we're looking over the long term. And so we don't want to assume that nothing's going to happen. So we take into account things like this. We take into account rental increases, rental expense increases, property value increases, and vacancy allowance. Vacancy allowance is a really big one. So for rental increase, expense increase, and property value increase, I typically do 2%. It may be higher or lower than that, but that's a good general average. For vacancy allowance, it can be higher or lower than this. 4% equals about 1 month every 2 years, which is pretty normal. Sometimes a little bit higher, sometimes a little bit lower, but that's what we're going with for today's example. It's pretty standard what I go with. And with all that factored in, including the vacancy allowance, on average, his monthly deficit for his rental properties is about $1,600. So right now, he has to pay $1,600 with after-tax income to cover the expenses on his 2 rental properties because the rent isn't covering it. That's the situation he finds himself in right now, every single month, down $1,600. So we're going to explore what we can do in this scenario. And so to do that, we're going to look at the accelerators. The first thing we're going to do is just turn on rental cash damming. And we're going to keep his scenario the same. So this means he's going to continue to pay that $1,600 deficit, except for now he's going to take that entire amount, prepay it to his mortgage, and pay his expenses out of his HELOC. Because remember, when you pay down the mortgage, the HELOC room increases. You're going to borrow from that to pay your expenses. So by just doing that, his life has not changed at all, other than he's making a couple extra transactions a month and tracking it. He's still paying the extra $1,600 a month. So let's look at the results for this scenario. If he does that, he'll be debt-free in 18 years instead of 26 years. So he's shaving 8 years off of his mortgage by just being smarter with the money he's already spending. This is zero extra, I can't emphasize it enough, zero extra cost per month. You're not paying a single dollar. So I put together this very helpful handy-dandy whiteboard. $1,600 monthly rental deficit, change nothing. There's 2 that I'm going to go over that have changed nothing. We just went over rental cash damming. You're continuing to pay the rental deficit. You're just doing it smarter. By doing that, you're going to shave 8 years off your mortgage. If you can't see that, 8 years off your mortgage. So instead of 26 years, you can pay it down in 18 years in this example. Okay, pretty amazing. Let's go over scenario 2. All right, scenario 2 is we're going to go one step further, not in costing you any extra money. We're just going to go one step further in using your money more intelligently. And we're going to add in the plain Jane. What this means is you're going to start using the money that you're paying down on your mortgage from your regular monthly mortgage payment to then take from the HELOC and invest. So you're still paying the $1,600 deficit yourself, but you're now using all the money that you were already paying much more efficiently. Let's see what the results are from that. Because now we're not trying to pay off early, now we're trying to maximize our net wealth. So after 26 years of doing that, I'll expand it here. Instead of just owning your house and nothing else, now you're going to own your house and have an investment portfolio of $3 million. Just same money. You would have been happily paying down your mortgage to zero, owning just your home. But now using the exact same money and tax efficient strategy, you get to have the maximum tax efficiency and have all this extra borrowing room that you wouldn't have had otherwise to actually invest. So you have a $3 million portfolio. Now remember, you still have a $1 million debt at that time. So you're coming out net worth increase of about $2 million. Let's go back to our handy dandy screen. Change nothing. Keep paying the $1,600. If you just do rental cash damming, you can be debt-free 8 years earlier. If you change nothing and do rental cash damming and plain Jane, you will be $2 million rich right there. You see $2 million. You are not changing your expenses in any way. You still have a rental property with a cash flow negative balance every single month. You are still paying that amount of money. You're just coming out way ahead, either 8 years earlier to be debt-free or $2 million more wealthy in the long run. Let's look at scenario number 3 now. All right, scenario 3, and we're going to stop paying that $1,600. A lot of people get into the rental property business thinking it's going to be great. They end up paying that rental deficit, and all of a sudden they're struggling. So what happens if we don't pay it? We're going to capitalize the rental shortfall, which means, we're going to turn this off for a second, which means when we have a rental shortfall of $1,600, we're not going to pay it out of pocket. We are just going to use our HELOC, which we have room on in this case, to cover all the expenses. So let's look at the results when we do that. Now we are saving $1,600 a month, so the results are going to reflect that. Now, and you can see the graph is a little bit tricky, but we're going to be debt-free still about a year and a half earlier. So this dark blue line is where your debt will be with the strategy. The green line is where it would have been normally. So putting $1,600 a month back into your pocket every single month, you can still be debt-free a year and a half early. Now, a year and a half isn't very much, but $1,600 a month is. So if you're struggling to get by on the cash flow, if it's a little tight, or if you just want to have more fun, $1,600 a month is going to make a big dent in that, and you still get to pay off your mortgage a year and a half earlier. Crazy. So let's go into the board. So we're comparing our 3 options that we've done so far. We did change nothing, rental cash damming, save 8 years. Change nothing, plain Jane, make $2 million in net wealth. Stop paying the rental deficit. This is an option that most people don't even realize they have. Stop paying the rental deficit and cash flow down. You're going to save 1.5 years. This option, you're no longer paying the $1,600 deficit from your rental. You're letting the strategy pay it, and you're still coming out a year and a half ahead. Crazy. Last scenario. We are going to, you may have guessed it, we are going to talk about adding the plain Jane in and allowing the plain Jane strategy to cover the deficit. So when you do the plain Jane, you make your monthly payment, you're going to end up clearing a bunch of your capital or your principal that you owe on your mortgage. It's going to free up your HELOC. The first thing we're going to do now is pay the rental deficit from what's been freed up from the plain Jane, and then invest any additional that there happens to be. And so now you're no longer paying the $1,600 a month deficit. You are still covering all your rental expenses, and you're being the most tax efficient you possibly can. So let's look at this. With that strategy, you are coming out with an investment portfolio after 26 years of $2.4 million and $1,600 in your pocket every month that you were previously not able to access because you had to pay rental expenses. You're no longer paying rental expenses, and you have $2.4 million of investment strategy. Now, after you get rid of the investment debt, you're coming out about $1.4 million in net wealth improvement by just being smart about your money, and saving $1,600 every single month. Absolutely mental how effective that is. So the last scenario, you have a $1,600 monthly deficit on your rental. You can change nothing. Keep making those $1,600 payments, but do rental cash jamming, you'll shave 8 years off your mortgage. You can add plain Jane into that to increase your net wealth. Keep paying that $1,600 deficit yourself. Come out $2 million in net wealth ahead. You can stop paying the $1,600 a month in rental shortfall, do rental cash jamming, still pay off your mortgage a year and a half early. Or you can stop paying the $1,600 a month, do plain Jane and rental cash jamming, and you'll make $1.4 million of net wealth improvement. Anyone that owns a property, a rental property, that's not doing rental cash jamming should start it yesterday, because it is so incredibly effective over the long term, whether you want to pay a rental deficit, whether you don't, whether you're making a rental income, whether you want to use that rental income for personal reasons or not. Rental cash jamming is too powerful of a strategy to not do when you own a rental property.